there's this common myth out there that if you have W-2 income, there's nothing that you can do to essentially save on taxes. Whenever I work with high W-2 earners, there's a few things that I always look for, and I try to expand the way how they think about investing their money. A lot of people mistakenly believe that they can just invest in some rental properties, they can get a property manager to take care of everything, and then they can still receive a lot of the tax incentives from investing in real estate. And that is not true unless you make under a certain income threshold where you can use up to $25,000 of passive losses against your earned income. However, you have to make under $150,000 to receive any type of this benefit. If you make over $150K, then this option is not available to you, and you would have to qualify as a real estate professional in order to use your rental losses to offset your income. Now, one workaround to this is to invest in short-term rentals. A short-term rental is classified as any property where the average tenant stays for an average stay of 7 days or less. And according to section 469 of the code, if the average tenant stays for 7 days or less, it's not a quote-unquote rental activity. And therefore, in order to treat the activity as a non-passive activity, you would simply have to meet material participation.